Morning, everyone. We shall start the session in another 30 seconds. We are expecting more participants to join. I think we are good to go. A very good morning, everyone. Once again, welcome to Pre-Bell with William O'Neill India. This is Rajasekhar Kongari, Equity Research Analyst. A disclaimer here is that stocks or any sectoral views we give are just for educational purpose, should not be taken as a buy or sell advice. Let's get into how the Nifty is placed at the current moment. You can see here after the reclaim of 50 DMA, Nifty is finding very difficult to advance higher. For the last 4 sessions, it has closed lower, and it has also breached its 50 DMA. Currently, it is trending just above its 21 DMA, which is at 15,785. We would want the Nifty to reclaim its 50 DMA and other key moving averages such as 200 DMA as well in the coming sessions. We are also looking for a follow-through day, that is a Nifty advancing 1.5% or more on volume higher than the previous session. That gives a confirmation that a new rally is about to happen. However, we are not seeing any such confirmation in the current market. That is the reason we are staying sidelines. And it's okay to say stay sidelines because capital preservation is a very important factor in any investing journey. So that is what we are advising our customers as well, to stay sidelines at this current moment. Talking about the key news which happened overnight or today morning is that according to government report, positive report that is saying that most of the reports in the globally are saying a recession is about to come. So this will definitely ease inflationary pressures in the country and globally as well. Because when there is a recession, there will be very less demand for the goods in the market. So that is a good sign that thus inflation will come down. Talking about the key new stocks which have reported numbers overnight, ACC, which is a major cement company, has reported not so good results actually. Revenue rose 15%. However, profit has come down 60% to 227 crores, mostly because of its raw materials and power and fuel costs have surged, especially because of inflation in the fuel space, which increased 26% quarter on quarter. This has impacted badly its profit after tax. Talking about L&T Infotech, which gave very good results, it has given earnings above street estimates. Revenue has increased 26.6% year-on-year basis in constant currency terms. PAT has grown on nearly 28% to 633 crores. Few key pointers to look at are margin has come down slightly to 14% compared to 14.8% in the last quarter. This is mostly because of attrition and employee cost, which has increased to 63% of revenue compared to 58% of Q4. Why the employee cost is increasing? Because mostly attrition is happening in the IT space. To get talent, companies have to spend higher salaries. That is the reason employee cost has been increasing for all the IT companies. Compared to previous quarter, attrition has come down slightly, down to 23.8% from 24%, which is a good sign. If the trend continues, that downward trend continues in the IT space, then employee cost will come down of the total revenue. Then the bottom line will increase for most of the companies. Another news is that Bharti Airtel has approved a preferential allotment of 7.1 crore of shares of the company to Google at a share price of 734, which is a good for the company. A company like Google investing in Bharti Airtel is good because of coming 5G spectrum. The company can spend higher funds to get more spectrum. Today, Federal Bank Aditya Birla Money, Just Dial, L&T Technology are the key companies which are reporting their Q1 results. So these stocks will be under radar today. Talking about institutional activity, yesterday FIIs have got 309 crores. This is a good sign because of last couple of months we have been seeing FIIs selling a drastic amount of equity shares in Indian market. Yesterday they have turned net buyers, which is a good sign. DIIs which have been buying the Indian market shares, they have sold 550 crores of shares yesterday. US market has closed slightly negative bias. Dow was down 0.5%, S&P 0.3% down. Nasdaq closed flat. Asian markets are also trading with a mixed bag. Kospi, Nikkei are trading flat. Shanghai also flat. Crude is $100 per barrel, which is a good sign for Indian because we are a major importers of crude oil. So our import will not get affected. Our finances will be more better compared to higher Brent crude prices. US 10-year bond is trading nearly 3%, and rupee has been depreciating against US dollar. But this is the case for all the major currencies across the globe. Euro, Japanese yen, everyone, like most of them are depreciating against the US dollar. And anything above 80 will be very detrimental to our economy. Our imports will get costlier because of rupee depreciation. So RBI might step in with their forex reserves to give support to the Indian rupee. So please be looking at the RBI comments. We might we are expecting some support from the RBI regarding this aspect. Talking about how the Nifty is about to open today, SGX Nifty is suggesting a 50-60 point higher opening for the Nifty around 16,000 level. It has closed 15,935.40 level yesterday. So 40-50 points higher opening we might expect on the Nifty today. If the 16,000 level is held and if that level is not breached, we might expect a further upward trend from there. This is how most of the sectors are placed in the current moment. Some of the sectors have moved higher from rally attempt to rally, which is a good sign. And most of them are reclaiming the 50 DMAs as well, which is also a good sign. But 200 DMAs are very crucial. Sectors like Nifty, Banking, Realty, Pharma, IT, they have been trading below their 200 DMAs. We would want all the sectors indices as well to reclaim those levels. Nifty, you can see here, it is trading nearly 6.5% down from 200 DMA. And 50 DMA is just 0.6% from here. So that level might be reclaimed today if we have good buying on the Nifty index. For the chart of the day, we have taken Tata Elxsi. As mentioned previously, we are not advising to take invest in this stock. This is just for an educational purpose, how we look at charts. Most of the parameters of this stock are looking good. EPS of 94 because of consistent earnings and consistent sales and EPS quarter-on-quarter basis and year-on-year basis. And number of funds have increased 67%, which is very good sign. On quarter-on-quarter, for a company like 50,000 crore market cap, still the number of funds have been increasing. That is, new institutions are taking fresh entries in this particular stock, which is a good sign. Also on the technical front, price strength is at 78, is a good rating. Buyer demand is also at B plus, considered good. Again, if you see the chart here, stock has been forming base after base. After breaking out, I can see here 4A, 4B, 4C. Because of not so good economic factors, market is not conducive for fresh entries. The stock is not able to make new highs. However, it has been very resilient in the recent market. You can see it has not breached its 200 EMA, which is a very good sign of a strong, fundamentally strong company. For the last 10 to 20 sessions, you can see it has been moving nowhere. It is forming a handle portion, and the volume has been on the lower side, which is a good sign according to us, because weak investors are getting out of the stock. Only strong company, strong institutions, or strong investors who have good faith about this company are staying invested. That is what we want in a company. If the pivot is reclaimed, that is 12% from here, we can expect further rally in this particular stock. However, we are not advising at this particular stage, because it is currently breaking out of stage 4C. That is considered as late stage base. If the breakout happens from here, any sell-off in the global markets or Indian markets, we might see profit booking happening in this particular stock. So that is the reason we will be staying cautious, adding late stage basis to our model portfolio. Yeah. Thanks for attending our pre-bill. We hope to see you again at after our session, and have a good trading session.